Welcome to this episode of the Fireside Chat with Neo, and we are going to talk about investing beyond your 401k. Now, obviously, the 401k is a brilliant investment for anybody who is planning their retirement because firstly, you have the advantage of your employer also contributing to your retirement corpus. So that basically makes it larger than it would be if you were the only person contributing. You also get a tax advantage because any capital gains are actually deferred. You don't have to pay it at that time as long as you withdraw your corpus after you're 59 and a half years old. Beyond this, I think there are other benefits because you can port from one employer to another employer. It's also an automated way of getting your retirement savings in, and we know that when something is automated, we tend to do it without any hitches, right? If we're left on our own devices, we tend to save less for retirement. So the 401k overall is a brilliant product. But there is an interesting quote which says that nobody said that retirement savings accounts are the only way that you should save for retirement. There are other options at your disposal, and it's worth exploring some of these other options. And that's exactly what we're going to do in today's video. We're going to look at why you need to explore different options, how they could benefit you, and what else you should be thinking about beyond your 401k. So firstly, let's look at what the 401k can do for an investor. Now, it allows you to save towards retirement, but remember that this money is basically locked in until you turn 59 and a half years old, after which you can withdraw it. If you do any kind of premature withdrawal, then you end up paying all of those capital gains taxes that you've accrued, and there's also a penalty of 10% that you need to pay. Now, given that this is not really suitable for anything beyond retirement, right? So if you were looking to fund your children's college education, there is a separate tax advantage account for that. But if you were thinking of buying a house or any other goal that you had, then the 401k is really not the investment solution. More importantly, from service provider to service provider, the options that you have within your 401k can change. So somebody who had a wider variety of options, when they change employers, might suddenly find that they are not able to do those same investment options anymore with their additional savings. So there is a need to look outside of your 401k as well, even if you're considering only retirement as your financial goal. So we've covered the goal-based reasons to look outside your 401k for investment solutions. Let's also look at diversification as a benefit that can come for those who look outside the 401k as an investment universe. Now, if we look at what the 401k typically offers, you have a top-down passive approach to investing. A lot of the investment options are mutual funds or passive index options. Now, if we look at the US economy and its context today, we'll recognize that the US economy is slowing down. You're dealing with a higher level of inflation than the Federal Reserve is comfortable with, and it doesn't look like you're getting to that normal level of inflation in a hurry. Also, you're looking at a lot of policy uncertainty. While the idea is to bring growth back into the US economy, a lot of the triggers are inflationary in nature, and you don't know whether these policies would get implemented and achieve those objectives that they originally set out to do. So keeping all of this in mind, an investor needs to question whether a top-down or a passive approach would work, right? You're also looking at a fiscal situation which is very different from what you've had in the past, and you're seeing US Treasury yields at more elevated levels than their historic records. Given all of this, it makes sense to look at a more bottom-up approach. It also makes sense to look at economies outside the US as investment destinations, because then you have a lower correlation with global assets, which could protect your portfolio from domestic risks. It also gives you the advantage of growing at a faster rate, especially given that the US economy is slated to grow at roughly 1.5% this year. So keeping all of this in mind, there is a lot of merit for every investor to think outside their 401k, because there are many investment solutions that you would both find practical and helpful in your wealth creation journey. If you would like to add a global flavor to your 401k portfolio, then we could help you structure an India investment strategy.